It's time for Money Mondays with Peter Fraser. He's our certified financial planner. He is with Credential Key Trade Securities and the Alterna Wealth Management Group here in Ottawa. Good morning, Peter.
Good morning, Rob. How are you?
Time to do the taxes, Peter. Time to do the taxes, right?
Yeah, I want to give credit to Jamie Gollenbeck for an article that I read recently that he produced, and I thought we could review some meaningful tax changes for 2023 that listeners could be aware of. So, you ready to go?
Ready to go.
In terms of the benefits, some of these could apply, maybe all of them could apply to either ourselves individually or people we know, but they're useful to incorporate at least in a review of your financial plan. So the first notable one has to do with indexation, Rob, and this one's important because every year almost all of the income tax and government benefit amounts are indexed to inflation. And CRA has recently announced that the inflation rate they're going to use to index 2023 tax brackets and amounts will be 6.3%. So it's probably the only silver lining in the inflation clouds that we've been enduring. The bracket adjustments already took place on January 1 of this year, and the benefits like GST and Canada Child Benefit are going to be increased effective July 1st of this year. So the next one
indexation. Well, okay, all right.
What's that?
I just find that interesting because I have not seen a number like that. Well, in my life, really. Tax brackets and benefit amounts being increased by 6.3%, but I guess inflation being what it is, that's why that rate is what it is, right, Peter? So, the basic personal amount, otherwise known as the BPA. Tell us more about that.
That's the amount of income we can all earn without paying any federal tax. And in 2023, that number is now up to $15,000. So any individual can earn up to that amount before paying federal income tax. It's a credit that's got a value of about $2,250, but higher income earners beware, probably won't get that full amount because there's an income test to this one. And the next one is a mouthful, Rob, called the Multi-Generational Home Renovation Tax Credit. You and I talked about this before in 2022, but the credit's now law, and it's equal to 15% of eligible expenses up to $50,000. So if they're incurred for qualifying renovations to help create accommodations to permit an eligible person. So think here of a senior or a person with a disability that they could live with a relative. And that's worth looking into. It's called the MHRTC, and listeners might want to check that one out. And then we're on to the anti-flipping rules. You and I talked about this one as well, and it's designed to reduce that speculative demand in the housing market. And, of course, they hope to cool excessive growth through this one. But effective January 1st, it makes the principal residence tax exemption that we all currently enjoy unavailable on the sale of a home that's been owned for less than 12 months. So there are some exceptions, but the general idea is that if you do this, the sale is going to be 100% taxable as business income if everything lines up against you. So that's an important tax change to be aware of.
Yeah. So if you're going to flip your house, wait 12 months and 1 day. And
12 months and a day. Yeah, I'm not sure we're going to see a lot out of this one. But
yeah, and I think, and in terms of, reducing the speculative demand in the housing market, I think we've seen 5-year mortgage rates pushing up against 6%. Seem to be doing that anyway, Peter. But
doing that quite nicely, yeah. But the last one's kind of interesting, and it's called the FHSA, First Home Savings Account. And legislation made this one law late in 22, and the FHSA is supposed to be available pretty soon, around April of this year, for usage. It's an additional registered plan that gives prospective first-time home buyers the ability to save up to $40,000 on a tax-free basis, provided it's going towards the purchase of a first home in Canada. It's going to operate like the RSP because your contributions are going to be tax deductible. And it'll also operate like the TFSA because withdrawals will be non-taxable. So I think this is a good addition, and the FHSA can also be used right alongside the existing home buyers plan, and that's the $35,000 repayable loan from your RRSP that's already in place and available on a first home purchase. So I think that looks like a good one. And of course, these are tax planning ideas that are always an important piece of a good financial plan. Hold them up to the light, see how they work out, and can be evaluated and be of benefit in the context of your plan. So,
well, I would encourage people if they hear something and or it's it is that time of year, people will have a lot of questions. Maybe they want some help navigating it or setting up a plan for the very first time. How can they contact you, Peter?
Always available for exactly that at Money Mondays at Alterna.ca.
Excellent. Thanks so much, Peter. Peter Fraser.
Thank you, Rob.
Our Money Monday segment for today. Yeah, tax time. Certified financial planner, Credential Q-Trade Securities, and the Alterna Wealth Management Group here in Ottawa.